Ladies and gentlemen, welcome to the program. Boy, we've had a wild ride this week. The stock market, are we in a crash or just a correction phase? Well, we're going to talk about that. Here we are today on the SPY right here in front of us representing the S&P 500, and this is the year to date. So here we go. We are down today, big time today. As you can see, we had this 10% correction, just 10% down from the all-time high. Tried to get up about 4%, 5%. As you can see, it almost touched this level here. So there was a support, a resistance right here with this candle here. Slide that across and you show that we hit 575 and it's been rejected. So we're down to 555 right now. Come down 551 for correction. So there's a lot drive behind us. So let's talk about, is this a crash or are we heading into a crash? Well, we're going to talk about it. I'm going to tell you why and what we need to look for. But before I do that, we're looking for 100 subscribers as a goal. Please subscribe to our channel. We're about 80 subscribers. Please hit the like up button. Helps get it out there with the algorithms, so more people can find our channel. So I really appreciate that. So let's get into it. Here we go. This is more of a correction phase because the market has just been slowly bleeding off. Okay, if this was a crash, everybody would be shooting for the door at the same time. They'd be running to the door, bottleneck, stocks would be dropping like a rock. In addition to that, which is the more important, is a crash is really going to start in the debt market, especially the 10-year yield. That 10-year yield has actually dropped 10 basis points today. If that did not drop 10 basis points, this candle here would be double the size, maybe triple the size. So someone's buying the debt, probably the Federal Reserve, Central European banks, and a crash is going to begin and end in the debt market. When you start seeing that 10-year yield spike up quickly, 430, 40, 50, 60, 5.0, 5.25, 5.5, then we're in for the big crash where everything just gets destroyed. 75% from the all-time highs you can expect to come down. This would just look like nothing right here. And that's what we got right here, nothing. It's a correction phase. It's a 10% correction phase. Yes, there's tariffs and all that driving behind it. So we're just gonna have to keep our eyes on this. But the real key here is to watch the debt market. That will display when the big crash is coming, or happening rather. So this is more of a correction phase. Profits have to be taken. When we zoom back here on the SPY, this is where we're at right now. Okay, and see, so right here, this is 2023. So you got 2 years of just going straight up, 476 up to 613. So there you go. Let's take a look at the QQQ. Okay, and that's just my opinion, by the way. Nothing's ever written in stone. But just for the record, WTI crude is still around $69 a barrel. And so let's go ahead and take a look. What do we do here? Let's take a look at the QQQ representing the NASDAQ. Here we are year to date. Another big sell-off today. And they tried to make it up past the correction. It did make it past the 10% correction, but now it's falling steeper. Let's see, do we have a 20% area here? Let's draw a 20% area here. That'll show if we reach that, we're entering now a bear market. So 540.81 was the high, and 10% was right there. Okay, at around 485, and we're looking for 20%, which is roughly 432. So let's go ahead and put a line at 432. Quick technical analysis for you guys. All right, 432. Let's go ahead and mark this. It was about 432.50, and this is 20% bear. bear market. 20% down. And we'll put that as green as well. Hopefully that holds that as support. So there you have it. Oh, it's not listing it there. Let's put this on the right. There you go. So we reached these levels of 432.50. We're in a bear market. Okay, so there we go. This is showing it stopped right here. We really need to hold this level here as a technical analysis from the last week. I was holding support around 467, 468, and we're at 468 now. So if we lose this, I can see it coming down to 447, down to 432, which would put us in a bear market. So let's zoom out and take a look at this again. You know, these stocks have just driven straight up. It was 22, 23. So from 23, it did have a low because we had that sell-off. So it did skyrocket up pretty high. Let's take a look at some other ones that move right along real quick that are affecting the markets. For example, Tesla, what they call the Magnificent Seven. We'll go take a quick review on that. Okay, Tesla, here we go. Year to date, Tesla's doing okay. We have that downtrend that we've drawn a long time ago from their high, and it's following this respectively nice. So a little heavy here. That's because everyone was against Elon for the Doge for cleaning up, you know, wasteful spending. So here we go. Down candle today. Let's take a look at the other 6. Apple. Okay, red day today. They've been selling off. They're below the 200-day moving average. Let's zoom out, take a look where we're at here. So again, they shot up a lot. When you look at this chart, they need to bleed some back. So this does look like an area of support. I would imagine around 209. Microsoft, definitely selling off. Let's zoom out. They're below the 200-day moving average. So yeah, I think we can maybe get support at 365. And it's at 378 right now. We'll have to see. Google, 3 big red days in a row. Biggest one today. But again, you know, this market's just going straight up. We'll find support at 152. It's likely. We'll have to take a look. Amazon, red day today. They've been coming down for a while now. They broke the 200-day moving average or below that. But again, this is just going straight up. So you imagine some profit takings and some pullbacks. Meta. Okay, Meta's really been going through the roof. 740 is an all-time high. We thought it would hold support at 602. It did not. It did consolidate in this area, but today it lost it. Okay, you see we had a little bit of a bottom tail here. Trying to hold the support at 502 or 602. Today it came down, but the 300-day moving average down here at 386. So the yellow line's a 20-day, red line's a 50-day moving average. This green line's a 200-day moving average. So they got a lot to do. Nvidia, here we can make this bigger so you can see it. Actually, you still can't see it. Let me move this over a little bit, you guys, so you can see it. And you should be able to see that now, right? So Nvidia's been selling off. Been up and down all around. What's this, 1-year chart? What are we looking at here? Daily chart, year to date right here. So they big zigzags. But you know what? It's holding its downtrend. And it's definitely coming down. Let's zoom out and take a look. It's below the 200-day moving average, which was 120. We are now at 109. But again, this stock just went straight up in the past 2 years. So, you know, that's part of the AI boom. So let's go ahead and get out of that. And let's take oh boy, look at that, ladies and gentlemen. That's today. So there's a lot of red there in the charts. Let's take a look at Palantir, PLTRs, AI software driven stock. I mean, it went to the moon. Now it's coming back. Held 75-hour support. Filled this gap. And tried to bounce back up to 97. Couldn't quite make 100. It's back down trying to hold 85 hours right now. The fact that it's only 85 hours I think is impressive. But we'll have to see. Other than that, let's take a look at oil. Oxy. The Oxy's had some good little, I mean, they're following this downtrend, which is not good. They're still in this downtrend. They tried to break out of it a couple times here, like maybe a double top here, but it was a lower high. Another lower high. So we're making lower highs here, and lower lows, so we're still in a downtrend. We're just slowing the downtrend down a little bit because we're breaking out of this line. So that'll be interesting to keep an eye on that. Nike. Apparently, they had a bad outlook, so after earnings, they just fell off the cliff here. I mean, figure their average price of around $80, now it's $63. So that's about it. I want to keep you updated with the markets. Keep an eye on the yield. It's going to tell us a lot. And again, I appreciate your support and thank you for watching. Have a great weekend.